So we are basically looking at the books of prime entry. When I'm looking at the books of prime entry, the first thing I need to know is the accounting process. How does the accounting process start? So first, a transaction takes place. Then I record the transactions. The place where I record my transaction for the very first time, that is called my books of prime entry. And the place where I record my transactions for the first time, it is called the journal. So when we're talking about the books of prime entry or the journal, it is the place where you record the transactions for the very first time. Now, the place where you're recording it is journal, and we have 7 books of prime entry: cash book, purchase book, sales book, purchase return book, sales return book, and the general journal. So, from the books of prime entry, we take our transactions to the ledger. From the ledger, we take it to the trial balance. From the trial balance, we make our financial statements, that is the income statement and the statement of financial position. You should know what is a book of prime entry, the place where you record the transaction for the very first time. Okay, now you see something and you record the transaction. So, what do you see while recording the transaction? The thing that you see while recording the transaction is called your business documents. So, you look at your business documents to record the transactions. Now, you should know that if you have issued an invoice, that means you are going to record the transaction of credit sales and you are going to record this in the sales journal. So, whenever I'm talking about a journal, there is a rule that you record credit transactions only. Transactions should be related to goods. So, if your business document is invoice issued, you will record credit sales. In which books of prime entry? In sales journal. If you have invoice received, then you're going to record credit purchases. This would be your transaction. And where are you going to record this? In the purchase journal. So, invoice receipt is for credit purchases. You're going to record in the purchase journal. Credit note issued. This is for recording a transaction of sales return in the sales return journal, and credit note received is for recording purchase return in the purchase return journal. So we have our 7 books of prime entry. In the cash book, you record all cash transactions. In the petty cash book, you would record small transactions. In the sales journal, you are going to record credit sales of goods only. So, your credit purchases of goods only. Sales return of goods only. Purchase return of goods only, and here would be the extra transactions, or I could say purchase of assets on credit. Okay, so when I am making my sales journal, when I am making my purchase journal, the columns would be date, details, dollar, and dollar. And in the details, you're only going to write the name of, in sales journal, it would be the name of the customer. In purchase journal, it is going to be the name of your supplier. Let's take it with one example. If I have credit sales, in which books of prime entry this would go? Sales journal. If I have credit purchases returns, which book of prime entry? Purchase return journal. So I have been given the books of prime entry. They want source document. Books of prime entry, sales journal, source document, invoice issued. Source document, invoice received. Credit note issued, credit note received. So when we are making the journal, we just write the name of the person. Now over here, you are supposed to make the purchase journal. Since I am supposed to make the purchase journal, I'm going to see only purchases of what? Purchases of goods on credit. Purchases of goods on credit. So bought goods on credit. This will go in purchase journal. Bought goods on credit. It will go in the purchase journal. Buy paying check, cash book. Cash sales, cash book. Paid, cash book. Cash sales, cash book. Bought goods on credit. Who offers 4% discount? Purchase journal. Bought office equipment by bank transfer, cash book. Paid check, cash book. Paid by telegraphic transfer, cash book. Sold office equipment, cash book. I am only supposed to record bought goods on credit. So I have only 3 things to record. Now, in the purchase journal, what I would write is just the name of the person from whom I have purchased the goods. So look over here. Amount would always be the net list price. And the net list price is what? List price minus trade discount. So I have bought goods from Millie. What I will write over here? Millie. Amount minus discount. Discount is 20%. So I'm going to take 20% of 320. I will minus it and I will get this. Bought goods on credit from EHL. Just the name and amount. No discount given, so it's direct. We always make it a habit to write the trade discount as information over here. Now, bought goods from Todd and he gives cash discount. It is important to note cash discount will not come here. So I will just write Todd. I will write the amount. I would do the total on the last date. And since it is the purchase journal, so I'm going to transfer this to which account? I'm going to transfer this to purchase account. And on which side am I going to transfer? I am going to transfer it to the debit side of purchase account. Now I should know where purchases have what balance? Purchases have a debit balance. So this is going to be transferred to the debit side of purchases account. Sales, credit. Purchase return, credit. And sales return, debit. So when I transfer this is going to be transferred to the debit of purchase account. Say if this was sales journal, so I would transfer to the credit of the sales account. Now I'm teaching you how to make a supplier account. Supplier account is also called a creditor account. And you should know that from our supplier, we normally purchase goods on credit. So since I purchase goods on credit, if asked to make a supplier account or a customer account, you need to see what you're asked to make. Since this is a supplier account, I'm going to teach you the format of supplier account. Supplier account always has a credit balance. Below that, what you would have is credit purchases. Everything else that is related to the supplier would come on the debit side. When we're talking about everything else, so that would be cash bank, that is money received from the supplier. Discount received, this discount is actually the cash discount. Purchases, returns, and even the closing balance. Everything else related to the supplier comes here. Now, keeping this in mind, let's see this. Kamika purchases fuel in bulk. Her transactions are as follows. So Kamika is the one who is purchasing. So it's here in the books of Kamika. And we're asked to make fuel to go account. That means Kamika is purchasing from fuel to go. It means fuel to go is the supplier. If fuel to go is the supplier, then we follow the basics of the supplier account. Since Kamika is purchasing, that means fuel to go is a supplier. So we follow the basics of supplier account, which says balance begin down on the credit side. Below that, credit purchases, everything else on the debit side. So 2017 March 31, you write the date on both the sides, 2017. March 31, paid by check the balance less 2.5% cash discount. So if you see, the balance was given to us over here. So the balance was paid. If the balance is here, you're going to pay it on the debit side. How much you're paying? Less 2.5% discount. So you're going to take 2.5% of this. That would be your discount received, and balance you've paid. Purchase fuel for motor vehicle and paid by check. Whatever you purchase, you paid by check. This transaction is a cash book transaction. Please note, fuel to go is a supplier. A supplier is a person who sells on credit to you. So he is going to sell on credit to you. December 10, purchase fuel on credit. Purchase on credit. Balance begin down. Below this, credit purchases. So it's a credit purchase of fuel. Since it's supplier account, it's understood it is credit purchases. And then they are giving you inventory balance, which has nothing to do with your supplier. So you close the account on the last date. Last date is given to you over here. Do the total. Write the total on both the sides. From this minus whatever is over here, you get the balance. And you need to bring down this balance on the first day of the next month. Writing the dates is mandatory. Another transaction, another sum of May, June 2015, where you're asked to make purchase journal, purchase return journal, and an account of a supplier. So whenever you're asked to make journal, purchase journal, the account, the name that is mentioned over here would always be your supplier. Purchase journal, so the name that is mentioned here would always be your supplier. Let's see. Nisha Chango or John Mayo. We are in the books of Nisha Chango. Nisha Chango or John Mayo means Nisha had to pay. Since Nisha had to pay, what does this mean? Since Nisha had to pay John Mayo, it means John Mayo is the supplier. It means John Mayo is the supplier. If John Mayo is the supplier, we follow the same rule for supplier. Supplier has a balance begin down below that credit purchases everything else on the debit side. So I'm going to classify where I'm going to record. Bought goods on credit from wholesale. Purchase journal, bought goods. Bought goods on credit from John Mayo, purchase journal. Return goods to John Mayo, purchase return journal. And paid to John Mayo. So that means this would go in the cash book. Bought goods from wholesale. So on 3rd April, I will write wholesale. I'll write the amount. 12th April, I will write the name of the person. I will not write the list price. I am going to write the net list price, that is after deducting the trade discount. Very important. Return goods to John Mayo. From John Mayo, I purchase at list price. So whenever I return, I am going to minus the trade discount. Then this total will be transferred to the debit of purchase account, credit of purchase return account, and with this I have prepared the journal. So on the debit of purchase account, I would write total for the month. On the credit of purchase return account, I'm going to write total for the month. So on the debit of purchase account, I'm going to write total for the month. On the credit of purchase return, I'm going to write total for the month. Now, they have asked me to make John Mayo account. Supplier. Supplier has which balance? Credit balance. Or John Mayo. Credit. Bought goods from John Mayo. Credit purchases. So opening balance on the credit side. Below that credit purchases. And everything would be at which price? Balance begin down, credit purchases, and everything would be at net list price. So this purchases that I got from here, it's not 480. It would be 480 minus the 25% discount. Purchases. Then return goods. Since I purchase at discount, return would also be at discount. 160 minus 25%. Now I paid John Mayo by check. That means bank. Balance owing on 1st April. What was the balance owing on 1st April? 560. This I paid by check, but subject to a cash discount of 2.5%. So I'm going to give a discount of 2.5%. That is 2.5% of 560. Discount received. And balance I will pay by check. The total of both this should be how much? 560. Because they're saying I'm paying the balance owing on 1st April. And then I will close the account and balance it.